We've had today science, we've had business, and now we're going to hear about another really important part of the development of this industry, which is investment. It's my pleasure to introduce the speakers in this panel discussion on investment in synthetic biology. We've brought together some of the industry's leading voices to discuss how the investment community is changing, the challenges for investors these days, and what makes for a synthetic biology unicorn. So please help me in welcoming to our panel our moderator and senior associate from DCVC Bio, Anna Fokina, portfolio manager of private investments at Viking Global Investors, Brian Kaufmann, managing director at NFX, James Currier, general partner at Andreessen Horowitz, Jorge Conde, founder of Faridan, Hazlehurst, and last but not least, partner at Mayfield, Ursheet, Parikh. Thank you.
Okay.
Founders, portfolio managers, managing directors.
Where they get my... Hello, this is the investor panel. My name is Anna Fokina. I'm with DCVC Bio. We are investors in synthetic biology, computational biology, and also leaders in agtech space. And I'm very happy to introduce an amazing lineup, panel lineup here. We have people across different industries focused on biodigital health and technology. And let's just start with Brian, and can you just introduce yourself, maybe have a few words about the fund and your specific focus?
Sure. So, hi everybody, I'm Brian Kaufmann. I've been at Viking about 9.5 years. Viking manages $31 billion spread across both public funds and private funds. I was on the public team for my first 5 years at the firm, and now oversee our private investment strategy. It's about a $5.5 billion fund. Half of that's dedicated to sciences, particularly things that are either genomic mediated or downstream genomic content, traditional biotech, and then synthetic biology.
Great. Hi, I'm James Currier. I'm with a firm called NFX. We're a seed fund. We invest $1 to $3 million in early stage bio companies. A lot of our investing has been in the software area, and increasingly we're focused on synthetic biology, and we've invested in companies like Mammoth Biosciences and TechBio, and we'll be announcing another investment tomorrow as part of the draft, which is the sort of business plan process that SynBio and we have been running over the last 4 months. So we'll be announcing that tomorrow.
Hi, good afternoon. My name is Jorge Conde. I'm a general partner at Andreessen Horowitz. Andreessen Horowitz is a early stage and late stage venture capital firm based here in Silicon Valley, where we have about $10 billion of assets under management. And within that, we have a dedicated fund that focuses in the bio and health vertical, where we invest in synthetic biology, we invest in the life sciences and novel therapeutics and diagnostics, and we also invest in healthcare technologies as well. And I'm pleased to be here, so thank you for having me.
I'm Annie Hazlehurst. I run a early stage venture fund on behalf of a family office, and the focus of the fund has been the intersection of tech and biotech, so how automation and software are going to shift how we approach biology and medicine.
Good afternoon, everyone. I'm Ursheet Parikh with Mayfield. Mayfield is a broad-based venture fund. We just turned 50. I lead our healthcare and genomics efforts. We are mainly early stage investors, mainly Series A, some seed. And how we like to approach the investment ecosystem is, so if I look at traditional bio-based investments, in the 70s and 80s, the model was about investing in companies to build big standalone companies. So entrepreneurs started those and investors funded those companies. That is where some of our companies like Amgen, Genentech, Millennium Pharma, Applied Bio, those came in. In the 90s, the world split where tech returns outpaced bio returns, and the bio entrepreneurship and investment model moved to one where people basically funded companies to create assets for large companies to buy. Where we actually like to work with companies in the bio ecosystem is if they see opportunities and a desire to go long and actually build companies with platform technologies, own your commercial path, and get companies to serious revenues. We think that this intersection of computing and life sciences is creating an amazing opportunity to build the next generation of such businesses. And if you're thinking about those kind of companies, it's clearly much harder than doing a research project to sell. But we'd love to talk to you.
Amazing. Maybe you guys can start with the definition of SynBio to you. I think everybody has their own definition what it means, but in terms of your investment thesis and scope, what type of opportunities are you pursuing in that space?
Sure. I will disclaim that I have no formal scientific training of any kind. I'm used to explaining this to complete generalists, so the thought of me saying it to a room at SynBioBeta is a little funny. But I guess I try and explain synthetic biology as sort of manipulating an organism's DNA and hijacking its cellular machinery to make targeted molecules of interest. And the way we sort of mentally think about the various avenues to apply that, there's sort of either molecules that can be made cheaper or molecules that are otherwise hard to source that are better made through biology. There are molecules that exist in nature but in sort of trace amounts that are better produced throughout synthetic biology, or they're completely de novo applications for it. And I think each of those comes with different opportunity sets, different risks. We've probably focused more along the lines of molecules currently being used that can be dropped in and replaced and are either solving a problem around cost, availability, or if bio is just a better way to produce something. That's where we've been sort of most active in pursuing it.
For us, we don't necessarily define the term synthetic biology. What we just look at is what do we think are interesting investing targets? What technologies and teams can be the beginning, the kernel of multi-billion-dollar companies. And so for us, at this age, we're looking for companies and opportunities that use a lot of computation. So we actually internally call it computational biology is what we're looking for, because we want to see that we can use iterative techniques and data techniques to impact the speed or the accuracy with which we can build new products and services. So we're very focused on the computational part of the biology.
Okay.
So I agree with what the other panelists have, the way they've described synthetic biology. The way we think about it is really that synthetic biology is the effort to make biology fundamentally programmable, where you can take and make components of biology and to have organisms or systems behave in a very purposeful way. And for us, the reason why that's extraordinarily powerful is if we look back at the beginning of my firm of Andreessen Horowitz, one of the launch pads behind the firm was the philosophy that software is eating the world, that every industry that's been touched by technology, specifically by software, has been transformed by it. And I think what we see here as an opportunity, and of course the folks around the room I think would embody this in its fullest potential, is the fact that biology, by becoming more of a programmable or engineered discipline, now has real potential to have an impact across a very broad range of industries, which of course if you just walk through the exhibit hall area, you can already see. And so our excitement in this space is really based on the fact that if the last 50 years were largely transformed by information technology, the next 50 will be increasingly transformed by biology. And that's where we're hoping to back and support the founders and entrepreneurs that are looking to make their mark there.
I think of SynBio essentially as next generation health. So I think we've potentially overcomplicated some of our definitions, but you're really talking about technology that's based in biology that can be used for humans, animals, and our planet to improve overall health. So we're interested in anything that falls in that bucket.
I think in the spirit of not being in consistent agreement, it's afternoon, right? People have to wake up. I'll probably sort of go ahead and say that we have to start putting a version on SynBio right now, because I think there was a SynBio 1.0 that went with biofuels, where a lot of money and a bunch of the other stuff that kind of get lost. In a side conversation with George Church, he was talking about how he's so excited about this company, and they just, that right tech, which was published in papers 10 years ago, went after biofuels rather than sort of going ahead and doing pharmaceutical bioreactors. I think what's different this go around is where I'll kind of take my answer. And we think that we are in this once-in-a-generation sort of engineering, biology, innovation loop that's hitting critical mass. This loop is starting with digitizing biology and a set of techniques that make it very, very cost-effective to take the cost of digitizing biology close to zero. So there's next-generation sequencing, single-cell sequencing, stuff like CRISPR to detect molecules without devices, low-cost PCR, wearables, all of that stuff like that. So that's allowing us to put in the traditional IT technologies, cloud, AI, all of that stuff into the digitizing biology too, as Jorge mentioned. But this has been paired up with, for the first time, we have very low-cost tools to engineer biology with very high degree of precision. So this is where gene editing, DNA synthesis, bioprinting, and that set of techniques, and then just the bottoms of advances in computational biology come. And what the marriage of these two things does is it makes it significantly reduces the cost to build new applications, because you now have building blocks the way you could do it in other parts of technology. Building blocks to build new applications, and these new applications are new therapeutics, new diagnostics, right? It's literally, we have living cells or living therapeutics, which is a whole new class of therapeutics beyond small cells and biologics that has been enabled by this trend. You can do detection, you can do new foods, you can do new materials. And I actually believe that the biggest impact of this technology is going to come in sort of, as much as I get frustrated about the inability of us as a species to stop global warming or climate change, I think this is the technology that is going to be the key to actually adapting to it and engineering around it. And so all of those end up being the factors that kind of get into the definition for us and as the scope of where we like to invest. Okay.
Yes.
Too bad.
But I think that was a very good insight. And maybe on that note, question to Annie and Ursheet as well. What do you think is the kind of future of synthetic biology for emerging market? Annie, you spent time in Africa and some of the Middle East and rural Asia. And where do you see that in food or healthcare? And that kind of gets to the point that you, Ursheet, mentioned with the next generation biology, the cost can be driven down, and maybe we're not going to have to face the same problems we had, for example, with AIDS, where there was a technology, but people couldn't pay for it.
Yeah, so I agree, and I think the science and the technology can do a huge amount to help issues related to health in those parts of the world. I also, and we looked at doing investment projects in some of these parts of the world, believe it's very difficult to actually locally develop any of this stuff, especially if it falls on the product innovation side. And at the same time, folks here and in Europe are disconnected enough from those markets that it's very difficult for us to develop the right products. So in order to solve the problem, there needs to be more collaboration in a really deep and genuine way. And I hope and believe we'll get there and be able to solve some of this stuff.
I think, I'll put 2 points to this, right? I think one of the places where synthetic biology is going to make huge impact is in agriculture. And the thing about something like agriculture is a lot of the emerging markets, they have their economies which are much more dependent on agriculture than the developed markets. And the regulatory pathways to get these innovations to market in those markets is actually lower than in the US, right? If you actually see, China has taken the lead on this. The sheer number of patents on synthetic biology in ag that China is filing, not just in China, but worldwide, is way higher. So that would be an example of something where it is really fundamentally adapting to climate change. And if you've seen a lot of that, it keeps on coming back that the emerging countries are, and the less wealthy populations are the most at risk. I think the second is it's actually allowing us to fundamentally rethink the economics of healthcare. So one of the thesis factors that drove our investment in Mammoth was the fact that if you can do nucleic acid detection without devices, it's sheets of paper, that are printed with certain reagents, and the interpretation is done by taking a picture on the phone. That means that you can now make diagnostics. Take one of the biggest killers, right? Mosquito-borne diseases. Hopefully, gene drives will eliminate the wrong types of mosquitoes, but if till they do that, the ability to sort of have tests that can basically be where the marginal cost is so low, and is able to differentiate not just sort of malaria, but dengue or chikungunya or all these other diseases. This is a way, so biology is a technology of abundance, and I think it allows us to make opportunities at the bottom of the pyramid possible that were just not possible without the ability to engineer biology.
James, you guys invested more in kind of digital space and now moving a little bit more into bio. How do you see, we spoke a little bit about the tech and bio, but what do you think about digital health platforms, maybe for hospitals or online platforms, and combining that with synthetic biology? Is there an opportunity at all? And Jorge, you can jump in as well.
we have investments in both software companies that are addressing healthcare and biology, as well as the actual biological IP of companies like Mammoth. And the companies function quite differently, although they're touching the same ecosystem, and increasingly they're going to be helping each other, okay? Because this ecosystem that we're in right now is really missing some fundamental information and data sharing infrastructure that you see in other industries that have been around in other industries, like supply chain management and other things for 30 years. And over the next 10 years, I think, or the next 5 years, hopefully, a bunch of you are going to start companies that help to create those pieces of infrastructure to help out all of us, connect each other, share data, share customers, create a supply chain, a synthetic biology supply chain. We know that Twist and others have become part of that supply chain, Illumina and whatnot. So we're investing in both of those. Now, within that, there are certain ways of designing your company and designing your business which allow you to build bigger companies. And one of the ones that we've seen is this, what we call a two-sided platform network effect. And Zymergen and Ginkgo and Mammoth are all pursuing this approach. So they could take their technology and they could wrap it with some software and some programmatic stuff and go after a vertical. Or they could design it to be more of a horizontal and then work with a lot of people. And every time someone uses the platform, data goes back into the system, which makes the system faster and better and more valuable for every new customer who comes on. That approach in the last 5 or 6 years have been used to great effect, and we see that both on the software side and on the bio side, and it really gives these companies an accelerant and also takes the top off how big they could be or how valuable those companies could be. And look, the more valuable your company is, the more employees you have, the more projects you can do, the more impact you can have in the world. So we actually see this whole money-making thing as a big part of the impact that these sorts of companies can make. So we're encouraging most of the companies we work with to figure out that platform layer if they can, and then embed that into working with tens and hundreds of customers. So I guess to your question, that's how we see some of what we learned from the digital side moving into the bio side, as in business design and sales, and really making these into businesses, taking them out of the lab, taking them out of a science project, and making them into a viable business.
And Brian, would you say that Viking is a big fund, invests a lot of different industries? What is the opportunity do you see? Why biology? Why not pursue just technology? Why moving into this industry where it's heavily based on science? And how do you approach that from valuation perspective?
Yeah, so two sides to that. I kind of got started in this private investing accidentally. I was covering Illumina in 2014 when they unveiled the first $1,000 genome, and my original hypothesis was that the fast fall in the price of sequencing was going to open up new applications for genomics that just were cost prohibitive even the day before this analyst day and the product was unveiled. So I started taking kind of online courses, reading some stuff, stumbled across CRISPR-Cas9. This was in 2014. I guess a lot of you all knew about it. I didn't. And then met some of the synthesis companies that were switching to the more robotic approach, dropping the price to synthesize materially. And those three coming together, the read, write, edit function, I thought was really powerful. And we started thinking about how would you exploit that. There's obviously material impact to human therapeutics and diagnostics, but there are also large industries and applied industrial biosciences that were now sort of cost feasible. So that was sort of how we thought what was happening at the ground level of science was actually made this time different. And I usually cringe when I hear this time's different. I would say it's not different in that this opportunity set has always been available, but what's different is that the tools all came together in sort of the 2014 plus or minus a year horizon to make it just a lot more attractive and feasible as an investment opportunity. How we pursued on the investment side is the nice thing about the complexity is it tends to keep generalists at bay. And whereas I would contend that almost every family office I've met is confident that they will be able to underwrite the next Uber or Airbnb or mass popular appeal that makes sense to them, people that have a generalist portfolio don't try their hand with like a single kinase inhibitor molecule. It's just deemed to be too risky. And more often than not, I think valuations tend to be more constrained in biotech. And if you want to play, you've got to really like engage in it and commit to it. And then you can accept that each molecule is risky, but we've got a portfolio now of probably upwards of 200 different molecules, largely uncorrelated bets that the returns payoff looks more like a Monte Carlo simulation than betting on any one molecule working. So either, I think, have to be fully committed to it and really assemble a portfolio around it, or probably stay away from it.
Interesting. And maybe while we're on the topic, can you talk a little bit about the collaboration you have with Illumina, and are you guys sourcing companies through it? Is it?
Yeah, so we started a vehicle with Illumina called Boost Capital. The idea was that at the time I was still a public equity portfolio manager. I was covering Illumina. I wanted exposure to these downstream applied content companies. I didn't have the wherewithal, technical ability, or time to actually evaluate, source, and engage them. So we said we will provide matching capital to the graduates of your incubator, accelerator program. If they can raise a qualified financing, we'll double whatever they raise, and we'll kind of come along for the ride. And the idea was we would get broad and well-curated exposure. These are companies that have been selected by Illumina, made it through their 6-month program, and raised a qualified financing from reputable folks. The thought being that some of them would have business models that unfortunately flamed out, but that's a reality, and some would go on to raise more material and substantive rounds. So we're only in sort of the third and a half year of this. We're starting to see some of the earlier companies go on to raise more material rounds. So there's been some signs of it. I'm hopeful that there are more and larger ones coming, but I've been pleased with it so far. Illumina's been great partners, and we've enjoyed it.
That's awesome. Jorge, what do you think is working in synthetic biology, and what are your learnings from the portfolio that you have?
Yeah, I think what's working is the fact that, as Ursheet mentioned a few minutes ago, there was sort of a wave, a 1.0 wave of synthetic biology, call it, 10 years ago, that really was about, essentially, could you do biology at sort of, can you optimize biology at very sort of high scale and almost brute force? And I think what we're seeing now as we shift to a sort of a second generation of synthetic biology, you're seeing it that it's much more component-based, where you have these sort of infrastructure layers that have been built, whether it's read or write. You have the ability to either go very deeply from a single application standpoint or very broadly from a horizontal enablement standpoint, as James mentioned. And so I think what you're starting to see is the rise of companies that can either develop significantly valuable end products that are not just commodities, which I think was one of the big challenges of 1.0, or can be so broadly applicable across a range of industries or applications that they can build a big business enabling others. And so I think that's one thing that is working in the space. A second thing that I think is critical and by the way, I was involved with one of these 1.0 synthetic biology companies when I was a graduate student, so I saw this very up close and personally. I think one of the other things that we're seeing now is that we're seeing a next generation of founder. And Brian mentioned briefly the issue of complexity. And I think there's no doubt that this is a very complex space. And so one of the things that we believe works and works very well, and in fact is critical, is to have the right founder in place. And that founder needs to be someone that has very deep technical domain expertise to really drive what is going to be, we call it traversing the idea maze, to figure out what is the right match for an application when it meets a market. And not having the deep technical domain expertise, I think, makes it very, very difficult to do that. So one of the things that I think works well in this space is finding the right founder or group of founders that can go after an opportunity set by finding that sort of magical match between where the technology can be most effectively and applied to the most value. I think when we sort of look across the portfolio, the companies that have done well is you can see success in both modes. We've seen companies that have been very successful in building this application layer, this broad enablement. And we've seen companies that have been very successful finding one niche application where their approach is uniquely suited to essentially do something that wouldn't be possible otherwise, or make something that wouldn't be possible otherwise. And I think it's that level of focus and having a strategy that's well defined early on makes a big difference for the company. Because if you try to do all of the above, it gets very, very difficult very early.
Mm-hmm, mm-hmm. And how do you go about finding these exceptional leaders? Do you collaborate with academia? Or is it more if you come across the companies, you find them, if not, you just look for a different opportunity?
Yeah, I have to say, I think that's the hardest part of the job. You hope they come to you, but that doesn't always happen. And so the thing we look for is, a lot of these exceptional people are coming out of academia. The founders of some of the biggest companies in the SynBio space today, some of them created the companies straight out of graduate school. And so, which by the way, I think is another important evolution in SynBio 2.0, that the founders now look a lot like tech founders, and that they're willing to jump in and do it themselves and build the companies themselves and be the central thrust behind the launch of the company. So the first thing is, we look for people that are multidisciplinary and essentially trained in the areas where they would need to be successful. So in synthetic biology companies, folks that are biological engineers or just themselves synthetic biologists are the things that we're looking for, and those are relatively new fields. So a lot of those people are either young faculty or just coming out of graduate school today. So that's a pretty fertile hunting ground. And then obviously you're looking for some level of self-selection, the people that actually want to and have the fire and have the drive to build their own company, because as many of the folks here know, it's not easy, it's not all roses. And so you want to make sure that you have that right match between the domain expertise and just sort of the constitution of the person that they want to drive their own company forward. So I would say that we hope our marketing helps attract the right people, but the reality is that this is more of a sales job. You got to go out and find the right people.
Got it. And on the same topic, Annie, you come from the science background, right? Mm-hmm. So how do you think about the role of academia moving and pushing synthetic biology forward and investor role funding them?
Yeah. Well, I think a big area that's slowly starting to get attention, which would really benefit from a lot more attention, is quantum biology. I think increasingly, it's pretty clear that there are a lot of quantum reactions going on inside all living systems. And if that is the case, then until we really understand that, we are only going to be seeing a narrow piece of the picture as it relates to how drugs work, how consciousness works, so on and so forth. And so, I think one of the challenges, and I've spoken to some of the founders of companies in our portfolio about this who are, sort of whiz kids on the academic side, there's not enough collaboration between physics and biology. And so the biologists are not weighing in on the physics, and the physicists are not weighing in on the biology, at least the upper echelons of those two fields. And so I think if you could get more grants and research that brought those areas together to really look at what's going on at that level, we may find that a lot of off-target drug effects, toxicity in our bodies, et cetera, is not, well, the ultimate reason is that the side reactions that are occurring are following quantum rules, not the three-dimensional binding structures that we like to believe is going on.
Right. Well, my physics professor always said physics.
But yeah.
Maybe that's what driving the distance.
Well, at the end of the day, it all rolls up into math, and so I do think, that is, it's easy for me to see that as the link across all of the subdomains, which really just become sort of different definitional categories of how you describe the math.
Got it. Yeah, that's an important fact. Ursheet, maybe you can talk a little bit about the importance of having the crossover fund ability to basically look into the private side and kind of different asset classes or different approaches to investing. What is the collaboration? Why do you think this is working? Some of the funds try to do that and it's not. And why do you think you guys have nailed it down?
Yeah. So I think there's two definitions on the crossover funds, right? One is funds which are doing sort of consumer, deep tech, bio, enterprise stuff, and then there's of course the stages side of the house. So Mayfield tends to mainly be early stage, while we do have a select fund that does selectively do later stage sort of investments. But we do this crossover across a lot of the sectors. And it has come from the fact that historically we've seen a lot of amazing outlier returns happen when you reinvent big parts of the tech stack, but also when tech disrupts other industries, right? So our return expectation from anything that we are doing in the bio space is no way different from like a Series A on a lift, or on when we do a select investment, the return expectations are no different from sort of having done the growth round in a solar city. Now, one of the things that we find is common, and different sectors like to think that they're a snowflake and they're different or they're unique. But if you have to eventually build a large scalable business, the design of the business ends up happening in the first 2-3 years of its existence. It starts with what is it that you're going to build, who you're going to target, what is your business model going to be, what is the culture and the values you're going to do, are you going for the long haul, who are all the stakeholders that are going to be. While you can find very promising people to start the company, how are they going to grow and evolve as the opportunity grows, right? How do you get that amazing team around them that basically effectively becomes their set of coaches that helps them sort of elevate out to the next level? So a lot of these, so in the end, right, whether we are doing a consumer company, a deep tech company, deep bio company, or an enterprise SaaS company, the answer really sort of comes down to what is this business? How is this built to last? How is it going to go from good at the starting point to great out at exit? And how are we going to go ahead and create value? And it innately, for me, comes from a personal belief that if you build a company to be acquired, you're really not mission-oriented because your mission gets subsumed by whatever is the larger organization that's acquiring you. So if you really want to realize your mission, then how you think of the commercialization, and if you earn the right to own your own sales force, then you get to control your destiny and realize your mission. And we find that core company building has been the common thread. That is sort of institutional knowledge in how we partner with the founders on those missions. So that's how we've been able to kind of get really good returns consistently by investing across sectors.
Mm-hmm, mm-hmm. And what about you, Brian? I think you had some experience more on public side as well and private. And how do you see these two fields, helping each other?
Yeah, I mean, particularly within biology, I don't know that the skill set required to evaluate a private biotech or public biotech are materially different, at least not on evaluating the company. The lines are so blurred. You could see a preclinical company go public. You could see an approved therapy not have gone public yet. It doesn't really matter. So that part's pretty similar. I think there's two things you need to do it. One is sort of structural. We've got a basically 24/7 trading desk on 3 different continents. We are familiar with securities. We know how to get out of them. We have experience trading them. And I think that informs part of the skill set, knowing how to value it. That's the only thing that's different between public and private. And so I think it is some level of discipline, experience, and getting punched in the face enough times in the public markets to know what's possible. I think the public markets right now are collectively saying to the private markets, like, you've got a lot of these wrong. And there's sort of an informal IPO index that I think the median stock is down north of 30% in the last 6 weeks. That doesn't happen in the private markets. So we are set up well to invest in companies right before they go public. One, we have the trading infrastructure. Two, we can invest in the IPO and can buy stocks on the public market. And then the reason I think we get sought out to do it is because Viking is probably better known as a public equity fund than private fund. And what a lot of companies are doing are basically trading some discounted equity for a reputation, putting your name on a cap stack. Like, if my whole team left and we started a new fund called like Brian Kaufmann Capital, nobody would want me on their pre-IPO if it doesn't mean anything to anyone. So it's a little bit of like a horse trade of like, we'll give you a little bit of stock a little bit cheaper, and we're going to tell everyone that you guys endorsed our story. So it's been, again, I think it's pretty similar in bio, but you got to get the valuation right, or you saw IPOs this week come out that are straight down 20% out of the gates, and that's the reality that can happen.
Right. I mean, you definitely see a lot of the disconnect between the private and public markets, especially in Asia, where a lot of the private companies are just funded heavily, and then when they become public, the reality hits, so to speak. But I would somewhat disagree on the point where, the biotech is kind of the same on the public and private side, because at least if you look very early, you really need to understand the technology, like the science. I think when you're in the public market, you look more into the clinical data, right? Most of the companies that are public already, they enter phase 1, 2, and usually in that case, you need to understand kind of the statistics more so than biology. And of course, biology is important, but at that point it becomes more important to understand whether there's significant data or not.
I would agree with you partially. I think if you're talking about Biogen and Alexion and established companies with PE multiples versus private, absolutely. But if I showed you profiles of 10 companies that are all around the same stage, it is possible that half of them are public and half are not. You are seeing companies, preclinical platform companies, get out without a shred of data, and that's probably a function of being in year 10 of a bull market. But there are also companies that we've seen privately that were like, they could have gone public 2 years ago, they just elected not to. So yeah, on the extremes, early stage companies and very mature ones with commercial drugs, very different. It's in that middle stage where we tend to be investing, where they could be public, they could be private.
And do you guys think it's sustainable to actually IPO that early for biotech companies? I mean, there's definitely a trend where we see that more companies exit earlier. A lot of the companies I came across exit at Series B, C, M&A. A lot of pharma wants to buy them, or IPO. In case of the IPO, do you think it's too early or not? And it's open to anybody.
Well, I think in many ways, the biotech companies going public, quote unquote early, many of them in the preclinical, at the preclinical stage, in many ways was an accident of history, right? Because you had only so much capital available as a private company that you could access. And the reality was that, especially unless and until you had proof of concept data, human clinical trial data, for most companies, you had kind of a ceiling of the valuation at which you would trade as a public company. And so then it's, in many cases, historically at least, it was sort of a math problem. If a biotech company is going to trade at a public valuation of, call it 300 million, and everyone that invests before that expects X% step up between private to public, then you can very quickly figure out when you kind of have to go public. I think what's changed over the recent years in this sort of unprecedented run in the market is that the private capital, or the pools of private capital, have gotten much, much deeper. And so there are companies that can elect, as Brian was saying, they can elect to stay private for the duration, some of them going into clinical trials. That's just something that wasn't possible before. And so I think one of the key things that has shifted in the biotech market is that historically you almost always had to go public out of necessity. In today's environment, it becomes much more possible for certain companies, for the right companies, to be able to go public by choice or from a position of strength.
At least as long as this lasts.
Correct. Yeah. No, that assumes that the environment.
And that could change very quickly.
Of course.
Yeah.
So, I'll just say what I advise the companies I work with, right? We have two companies, they're still in stealth. They are pretty late clinical stage. And our advice is to them is to not go public anytime soon. These are platform companies. The challenge with taking a platform company public too early is, in the bio field, you have never really truly eliminated the science risk. And if as a public company, your lead indication fails, right, it becomes pretty hard to recover sort of from that. So if you really are a platform technology, you could do much better by actually, so we clearly first advise the companies to take multiple shots on the goal simultaneously. But at the same time, so at least my advice to the companies that I work with is after you have done phase 3 is probably the better time to go. And as long as you are willing to be pragmatic about valuations, company building, things like that, understand the stakeholders as different investors you bring on the table and their models, you could actually, I think even when the market's correct, there will be money for, those kind of companies.
But could you actually recover as a private company if your lead indication fails? Because it's a pretty strong signal.
Great question. So, this is what I tell entrepreneurs is what's good fit for us is if out of the first 10 million you raise, if 9 million of it is going in your lead indication, you should go to a biotech fund, which is having 30, 50 molecules per fund. If on the other hand, you can actually innovate not just on the product, but how you're going to partner and on your business model, such that, majority of the first 10 million raised is actually going on your platform and not just in your lead indication, then we are probably a good fit for you.
So speaking about public and private markets, what can we learn from WeWork? What are you guys' observations? How is that applicable to biotech? And we see definitely a gap getting smaller and smaller between the tech and bio valuations, right? There are more tech investors getting into bio, and a lot of the valuations actually going up because they think people changing the way they think about these companies, their platforms. They generate more cash flow. They're more, there's somewhat less risk. And so people are willing to pay more. And especially right now, the economy is great, and there are funds like SoftBank that are willing just to put a lot of money. So can we avoid that?
Yeah, we've been pretty close to the WeWork situation through personal relationships. Look, I think the thing that you're seeing with WeWork is that you had an incredibly charismatic founder who wrapped the right words around what has traditionally been a very robust business, which is just commercial real estate. Right? This is sort of an infinitely sized market. He's bringing technology to it. He's making it look like a tech company. It's not really a tech company, but it looks like, gets everyone all excited. The valuation goes up crazy. And people got way ahead of their skis. It happens from time to time. In every market, in every time of history, dating back as long as we have records, there's always some charismatic person who comes out, gets all the investors to go nuts about tulips or about whatever, and then this happens. So this is an old story. People got caught in this one again. It's going to happen in biotech as well. I mean, it does with some of these public companies that go public before their phase 1. I think what we have to realize is that this space and this group of people in the last 4 years and for the next 5 years is in the middle of the sort of commercialization phase, if you will, right? When we were going to this conference 3-4 years ago, there was 600 people, 500 people. And still today, look at all of us. We're kind of geeky. We're not dressed pretty well. Everyone's a little bit awkward. Like, this is where things are changing. This is where we're actually doing the work. You go to TechCrunch Disrupt down the street, it's celebrity tech. Right? It's celebrity tech, and the money's sloshing around, and everybody's taking photos with Andre Iguodala and all this. But this is where things are really changing. And so capital is constantly trained to look for where things are changing the fastest, and things are changing the fastest here. But we're in the middle of that phase, and we haven't gotten yet to the celebrity tech, and WeWork is a perfect example of celebrity tech.
Well, but there are some very charismatic founders in biotech world as well. Theranos is probably like a good example for that.
Yeah, it's going to happen.
Okay,
By the way, I think we should point out that James's shoes are absolute fire.
Yeah.
Oh, look at that. Well, your shoes are kind of matching your shirt.
Awesome.
So, and in terms of, thinking about that gap between the bio and tech investors, we see syndicates kind of heavy either on the bio side or on the tech side. Do you think that gap should be narrowed? Do you think that's a good trend? Do you think tech investors should include science investors? And some of the pure life science investors are just not willing to take the tech risks, and some pure tech investors are just afraid of the binary, which is, by the way, probably is not that binary anymore, risk from biotech.
It's a great question. I'll just go quickly, even though I spoke last time. We went through the same thing about 10 years ago, and we were starting a software business for the healthcare sector. And you'd have venture firms where you had the healthcare partners and you had the software partners. And they hated each other. They really did. There was so much acrimony in these firms because they didn't understand each other's business models. They didn't understand the comps. They didn't understand, how the valuations. It just was a mess. And so as we went out with this, we saw how dysfunctional it was, and there were so few good companies that understood both healthcare industry and how things get paid, and also software. Now we're adding biosciences, and so we're facing the same thing again. It's very hard to get these types of people who understand both computation and biological science. There's just not that many humans in the world who have absorbed, 10 years of research in one and 10 years of research in the other. And so when you find them, treat them like gold, because there are actually not many of them. A few of them are here on the stage, but be very careful. This is a problem we have all the time when we have crossover types of businesses. So it's a really great question.
Yeah, and I'm glad you said that, James, because one of the things the approach we've taken to the space is to actually, we're talking about founders being multidisciplinary at these intersections. Our view has been, as investors, we also have to be multidisciplinary. So the folks we have on our team can go deep on the biology side, can go deep on the technology side. But I think importantly, we look at how the companies evolve. It's really interesting. The syndicates, and we've seen examples of this, the syndicates, as the companies sort of go up the belief curve in terms of proving that what they have is quote unquote real, the syndicate naturally changes. And so we've had situations where we've been early capital in, and we've had a traditional biotech fund put in a little bit of money because they just want to get a look. And then the next round, they lead that round. And the round after that, you start to get sort of the traditional healthcare or biotech crossover investors. We've seen the exact same thing from the other side, from the tech side, where we'll do an early round of capital, and a traditional quote-unquote tech investor will come in and say, I'll put in a little bit of capital, and the next round they want to lead. And so I think a big part of this is just like you folks are creating new opportunities in new markets. I think there's a new breed of investor that is going to need to emerge. It's going to be multidisciplinary to almost act as the glue that helps move these companies from a capital perspective, move these companies up the believability curve to make it more comfortable for more traditional investors.
Yeah, we call it the ladder of proof. How far up the ladder of proof can you go? You expand the number of people who feel they can take the risk.
Exactly.
Yeah.
Interesting. On that note, how do you think that, what's the best investment strategy for VC funds to have? If you trying to invest in both, are you getting more hybrid, or you should stay one direction? What are your takes? Maybe Annie, you mentioned that you guys kind of focus on health tech and biotech, and do you see that there's a benefit of being a hybrid fund, or do you think it's better to be just focused on life science or just technology?
I don't think any of these domains are actually isolated domains. I think that's one of the fundamental problems that we have. And so we try to silo everything, and by trying to silo everything, we have huge blind spots within each silo. So we fundamentally need more cross-disciplinary collaboration. But at the end of the day, I think it all rolls up into math. And so, if people could go back to a lot of these areas and start thinking about them from a first principles basis, we would probably get a lot further.
Okay, well, that's awesome. I believe that's the time we have. Just checking.
It is.
Oh, yes, I see the timer actually right there. Well, thanks a lot very much. I really enjoyed the conversation. Thank you guys as well.